Okay, so impact investing is not a new term. It's been around for some time, but it's become much more popular as a way of thinking about investing over the last 2 or 3 years. The definition of impact investing, according to the Global Impact Investing Network, or the GIN as it's otherwise referred to, is to make an investment that is targeting explicitly both a financial return but also an environmental and a social return. So there's an environmental and social benefit to that investment that goes along with the financial return. WHEB has been managing a positive impact investment strategy for over 13 years now. We first developed the strategy in 2004, 2005, and it's been at WHEB since 2011. When we first developed the strategy in the early 2000s, our initial universe was just 350 stocks, and those were companies around the world on global markets that we had identified as being companies where the product or service was solving a sustainability challenge. As the strategy has evolved, we've increasingly tightened and made more difficult the conditions to get into the universe. The criteria for universe entry have become a higher bar to get entrance into the universe. However, despite that increasingly difficult set of criteria to enter the universe, be seen as a positive impact company solving a global sustainability challenge, our universe today is around 950 or 1,000 companies worldwide. That's on developed markets. They tend to be mid-cap oriented companies. These are companies that have established franchises, established businesses, are cash flow generative, so they have a level of maturity, but they're generally mid-sized companies experiencing rapid growth because their product is solving a global sustainability challenge. So the market for companies that have a positive impact is growing rapidly, and part of our core thesis is that market is growing more rapidly than the growth in the more generalized global economy. So companies that are creating a positive externality, that have a positive impact on the world, are companies that face positive growth in their end markets, and that's why it's an attractive investment universe to start with. At WHEB, we think that we are in the early stages of what we refer to as the sixth industrial revolution. If you look back over 250 years of human history, we've seen a process of continual change over time as new technologies have enabled new industries to develop and replace traditional industries and create better outcomes and better standards of living in society. In this sixth industrial revolution, we're coping with the needs of change from an ongoing, growing global population that is looking towards achieving higher standards of living and higher levels of consumption with that in a world that has finite resources. And so there is both a possibility from technological change, but also a need from an increased number of people consuming more resources to see change. And so in this process of industrial revolution, we're seeing old industries come under significant threat, and so there's some parts of the global economy which will be, for which this transition to a more low carbon and sustainable economy is really not very good news. It's a barrier to growth. And there are some parts of the economic complex of the industrial world and of the investable market for whom this is a real opportunity, for companies that are solving the great challenges of our time, that are promoting better social and environmental outcomes. That is a growth opportunity. And that market is growing, and we need to see it grow to see that transition accelerate to a more sustainable economy. And as that transition grows, the opportunities for investment will expand, and so this provides very significant support for an investment strategy that's focused on positive impact.